Is silver getting ready to rip higher? While the Deutsche Bank announcement may trigger some celebratory dances in precious metals community, rest assured that for every bank removed from its gold and silver market manipulation service, they will be replaced by banks sitting on the bench. The more interesting issue, in my opinion, is whether or not the bullion bank's ability to keep the price of gold and silver capped with any relative degree of success is fading. The big buzz yesterday in the precious metals market was the news that Deutsche Bank has agreed to settle charges for its role in manipulating the London Bullion Market Association daily gold and silver price fixings. My view on this, albeit jaded, is that akin to the settlement charges being paid by the big Wall Street banks for their fraudulent behavior in the housing bubble mortgage market, although Deutsche Bank has agreed to spill the beans on other banks, I have yet to hear any mention of JP Morgan, Citibank, Goldman Sachs, or any number of the Western bullion banks who engage in daily price intervention in the gold and silver futures market on the COMEX. My view on the matter, that is, until I see otherwise, this is nothing more than we took care of the problem, move along, there's nothing else to see here situation. Deutsche Bank is like a trapped felon who blinked in the game of prisoner dilemma and gave up a couple of names in order to let it continue forward in its endeavor to save itself from collapse. While other indictments may be doled out, I do not see this as an advancement in the effort to reform the trading activity in the gold and silver markets. After all, the banks who manipulate the market on behalf of the Western central banks and governments who are highly motivated in their effort to prevent a sustained rise in the price of gold from signaling the West's continued financial and economic deterioration. While the Deutsche Bank announcement may trigger some, I already read that earlier, the reformed LBMA gold fix process is proof of concept. The prima facie format has been somewhat altered, and as have the names involved, but it can be argued that the reformed price fix process is perhaps even more permissive of manipulation than the old format. The more interesting issue, in my opinion, is whether or not the bullion bank's ability to keep the price of gold and silver capped with any relative degree of success is fading. History has proved that all forms of market intervention eventually fail. If the intervention in the precious metals market did not ultimately fail, it would be a systematically unique event. I would have the readers recall the fact that the Rothschild family, which founded the London Gold Fix, withdrew from its involvement and connection to the LBMA, including the twice daily fix process in 2004. Something like this happens for a reason. It's been my view that silver hit a bottom in mid-December when the COMEX silver contract closed at $13.72. The bottom was affirmed the day that silver was instantaneously plunged down to $13.58 for the purpose of the LBMA price fix, and the futures immediately thereafter snapped back over $14. That was perhaps the most audaciously blatant act of manipulation that I've witnessed in any market in over 30 years of involvement in all aspects of the financial markets. I also believe it was a last-ditch capitulative effort of sorts by the bullion banks, and of course the LBMA never did offer an explanation for the egregious price anomaly. Since mid-January, the price of silver has been uncharacteristically buoyant, especially in relation to the price action in gold. In general, silver outperforms gold on days when gold is being successfully manipulated lower, and in general it outperforms gold on rally days. I'm not adamant technician or chart reader, but the two graphs below are suggestive of a market that's ready to make a big move higher. The graph on the left is the 2-year daily of COMEX silver. It appears to have carved out a nice bottom, and it has broken out above the 50 and 200-day moving averages. After successful retests of each, the graph on the right is a 16-year weekly that goes back to the beginning of the secular bull market in precious metals. After the big move up from '08 to '11, silver manipulatively pulled back a 16-year uptrend line and bounced. Whether or not this is nothing more than a short-term bounce or the start of the next big move higher remains to be seen. I've told colleagues since the beginning of the year that I won't break out the first case of champagne until silver trades above $20 and moves higher from there. Certainly, the systemic fundamentals which support much higher prices for gold and silver grow stronger every day. Having said that, I remain firm in conviction that silver will also be the best performing asset class at least through the rest of the decade. I am also growing more confident that both gold and silver are set up to make a big move higher over the next several months. Take care, guys. Keep stacking.